Hello and namaskar, viewers. I am Sanjeev Pandya, welcoming you to the Money Talks show, season 5, right here on ITV Gold. The show is brought to you by SAI CPA Services, a full-fledged professional accounting firm located in the state of New Jersey, multiple locations in New Jersey, but the point is, wherever you are in the USA, you can contact SAI CPA Services and have them look into your tax situation, financial situation, or where you can invest money to save your tax liability. And for any other tax-related matters or even IRS tax audit, you can contact SAI CPA Services at 908-888-8900. That's a 908-888-8900. Visit their website, saicpaservices.com. This is a show called Money Talks, and we are in season 5. Thank you so very much for your constant support and watching the show. This show brings you all the talks related to money, basically just to let you know, kind of guidance, advice, that's what the show is all about. And all the input and guidance and advice is given by Mr. AJ Kumar of SAI CPA Services. He's a CPA, CBA, and MBA with over 30 years of experience collectively put it together. And he has a knowledge, and he joins us every week to share his knowledge with us right here on ITV Gold. With that note, let me welcome Mr. AJ Kumar. Sir, good to have you, and thank you for being on the show.
Thank you, Sanjeevji, and thank you for the kind introduction. I'm happy to be here.
Yes.
This is our 5th season.
Yeah.
And this season, we are bringing little more than taxes. As a CPA, we have been talking about taxes, how to save tax, how to minimize your tax liability, how to invest into tax-free asset. But this season, we wanted to talk about money in general, how to save money, how to make money, how to make money make money. So from that perspective, we bring you the 5th season of Money Talks.
Very nice. Yes, absolutely. 5th season of Money Talks. And this is the episode number 2. And here we are. And, AJ, there's a saying that when you are a smart person, you know how to handle smart money. And when you really are handling smart money, that means that money will make a money for you also. That's what the nature of the show is all about, Money Talks, because your money makes money. But being a smart person and handling money smartly, which is one thing. But today we want to hear from you the smart assets. What are the smart assets where individual can invest money in any one of those smart assets and will definitely help to make money out of their smart assets. So that's what we like to hear from you in this episode.
Absolutely, Sanjeevji. Information is power. It doesn't matter how smart a person is. You cannot time the market. You cannot time the future. You cannot invest into an asset where you're guaranteed to make multiple times of money. What you can do is to diversify, be consistent, dollar averaging. There are basic principles of money that you can follow to make sure that you are ahead of the curve. Don't be emotional about it. It's a mechanics around it. It's a science. It's not something that you can just be emotional about. We'll talk about 10 assets today, as we promised last time in our last week's episode. 10 assets that you should consider investing in. A lot of people talk about saving money. Penny saved, penny earned. Save today for tomorrow. Today, we want to take this step a little bit further. It's not just saving, it's investing. And there is a key difference here, Sanjeevji. Saving is for tomorrow. Saving is for short term. Saving is for financial emergency. While investing is a long-term view. Investing into long-term asset, investing into assets that will grow in the long term. I don't need this money tomorrow. So there has to be balance around it. There may be an emergency tomorrow, a medical emergency, family emergency. So you need to have some savings, but at the same time, it's not all about saving. There is an investment angle to it.
Exactly, and it's also long-term wealth planning.
Absolutely.
To invest in a smart assets. Of course, money makes money, and smartly you will make money. But this is also long-term wealth planning, and it can be done. So let's start with the number of smart assets for our viewers. And I think on your top of your list, it would be real estate, right? The real estate would be number 1.
Real estate has been hot in our market. Real estate has been hot for many years now. So have some exposure with the real estate. Real estate is a long-term investing view, wealth building view as opposed to saving view, because it's not liquid. Once you invest, you don't have a lot of control on when you can sell it. Make sure you don't invest all your money into one asset. You have to have right diversification. As much as real estate is a good investment, it's sunks up your money. It's not liquid. It's not something that you can use as an emergency fund. So if you have a job, consider a rental property. If you are a small business, consider buying the shop, buying the warehouse. Make sure you have a real estate angle to it. We'll be talking about 10 assets. Make sure you diversify. Don't put all your money into one asset. Not all the 10 assets are going to be good for everybody. You have to decide, you have to look into your situation, what assets make sense for you. When it comes to real estate investment, it doesn't have to be local. It could be in a different state. It could be in a different country. You could be considering investing into India. That's also a good idea. Make sure you consider the foreign exchange fluctuation. Dollar rate has increased to 96 now. It used to be 85 few months ago. So make sure you factor everything, and just because you cannot control all the variables, make sure you diversify and put the money into multiple angles, multiple assets.
Okay, all right. While we are on real estate, let's just touch base upon a little bit more into real estate. When individual invest in a real estate, obviously it's a property, and there's a rental angle to it also. So, when there is a rental angle to it, that means rental is an income, and continuous rental income comes in, and then you build up your wealth such a way, property gets paid off, and you own the property, real estate value goes high and everything. Can you touch base upon being a CPA tax related benefits to this real estate smart asset?
Absolutely. So all income, rental income, active income, passive income, dividend income, interest income, in theory, all income is taxable income. The key here is when you get the rental income, you claim mortgage interest around it, property tax around it, large depreciation, cleaning and maintenance. On paper, you generally don't have any income to show, especially with the depreciation factor, which is a non-cash factor. You're not paying out of it, but it's a deductible expense for you. So in theory, for all practical purpose, your rental income effectively becomes non-taxable income. It creates cash flow where you're not paying taxes, because on paper, when you subtract the mortgage interest, property tax, depreciation, and other expenses like association fee and all, you don't have any paper profit to show. There is no taxable income when it comes to the rental income in most cases.
Very good.
That's why rental income is considered as effectively tax-free income.
Mm-hmm. Very nice, and that's sort of the angle we wanted to add for our viewers. So on the list of top 10 smart assets, real estate sits at number 1, and obviously very, very attractive investment, but make sure that you find the right property and which has a right appreciation value now, and it will also appraise very well in the future also. Now let's go to the number 2 in the list of smart assets for wealth building, and this one has to do with retirement accounts. If you manage retirement accounts very well, that can be also, amazingly wealth building option.
Absolutely, Sanjeev. Depending on your portfolio, depending on if you have W-2 income, business income, self-employed, working for somebody else, you have to consider some tax-free income. The idea is if you invest into qualified retirement plans, 401k, IRA, SEP, defined benefit plan, 403b plan, they have some of this investment designed in a way where you don't pay any income tax. Your taxable income goes down by the amount you are investing into these plans. So again, when it comes to any of these assets, you have to create a balanced portfolio. Not all of your retirement income has to be qualified. Some of it can be going into non-qualified plans, meaning when you invest money into qualified retirement plan, you are saving tax today, but the downside is when you take this money out at the time of retirement, you have to pay some tax on it. So at the time of retirement, you want to create a nest egg where you don't have to pay taxes. Some money where you can pay taxes, some money where you don't have to pay taxes. So right now, while you're thinking about retirement planning, retirement assets, don't put everything into qualified plan. Put some money into qualified plan, some money into non-qualified plan where you don't save taxes today, but it grows tax-free, like Roth plans. It grows tax-free, so at the time of retirement, you don't have to pay taxes. Again, the key here is diversification for us.
That's this can be very very attractive, and this is in the long term. It builds up as we go along. Now tell us, AJ, about this. That how does it help in the taxes? Because as you say, you can pay taxes a little bit later on. But managing these savings accounts, how does that work? Managing account, and in one of those savings accounts where employer contribution is there, then you would suggest to definitely take advantage of that, right?
Absolutely. So employer contributions are generally given on the 401k plan, 403b plans. You can have SCP plans with employer contribution. So employer contributions are quote unquote free money for you. So if there is an employer contribution, you should definitely take advantage of it. The key here is when you're investing money, employer contribution or no employer contribution, either way, when you're investing money, make sure you're not investing all your money into one type of plan, qualified plan or non-qualified plan. You want to grow this money in a way at the time of retirement, you have some income which is taxable and some income where you don't have to pay taxes. So find the right balance for you.
All right. And to find the right balance, AJ, with your permission, I'd like to add one point in here is that, yes, the tax season is over and whoever filed extension, they will be filing tax returns in September and October. But the one advice that I like to give you is that if you really want to save your tax liability, it's not to avoid tax liability. I want to make it very clear. To save your tax liability by investing money into any one of the savings accounts or retirement accounts, my suggestion would be to meet AJ at SAI CPA Services, get their advice, and you can start putting money away now. So that way, when the time comes in to file your tax return for this year into next year, you will see this substantial tax savings on your tax return because you already started this investing money into one of these retirement or savings account. So for that, visit SAICPAServices.com or give them a call at 908-888-8900. Book an appointment and have them review your situation. But this would be one golden advice for you. Start taking action right now. Let them review it and get their advice. With that note, we're going to take a short break. And when we come back, we'll continue to discuss on those smart assets for long-term building wealth. We'll be right back after these messages. Welcome back to the second part of the Money Talks Season 5 right here on ITV Gold. This is episode number 2 and this is the show Money Talks. Of course, it's all about money and we talk about money so that way you get to learn more about money and you can be a smart person to follow those steps and build up your long-term wealth. That's what the show is all about. But this is all advice and a guidance. This is not endorsement of anything, not even from Mr. AJ Kumar, the guest of the show, or not even from me, the host of the show. So this is just for your knowledge purpose. As Mr. AJ says, the knowledge is the power. Now, continuing our show, Money Talks. Earlier, before the break, we talked about smart assets. There are 10 smart assets where you can invest money to build your long-term wealth. We discussed 2 of them, one being a real estate and the second one being the retirement accounts and savings accounts. And now we're going to go into the third one, which is one of the most liked one, and that has to do with the stocks and equity investment.
Absolutely. So we'll talk about stocks. As much as we are not endorsing any stock, equity investment have been one way to grow the wealth historically. So be careful. I'll prefer ETF as opposed to individual stocks. If you don't understand the market, if you cannot invest a lot of time in the market, maybe you want to consider ETF, index fund, mutual funds as opposed to individual stocks. But stocks investment have been there, and a lot of people have made a lot of long-term wealth in stocks investment, equity investment. Please remember, it's not something that you want to play with. A lot of money can be lost in a very, very small amount of time. If you are considering stock investment, please take a long-term view for your stock and equity investment. The next asset, which is very close to my heart, Sanjeevji, is professional investment. And a lot of people don't understand this concept. The way you want to look at it, the way the concept works. Invest money into yourself. And what I mean by professional investment, and again, this is one area which is very close to my heart. We all are foreigners. We came in this country from outside this country. Then you come here, you do MBA, you do CPA, you do wealth planning, you do business valuation license, and then you try to make a living out of it. So the best investment is investing money into your education, yourself. I'm not advising you to buy an expensive car. That's not investing into yourself. I'm not advising you to buy $1 million home. Live humbly. Invest more money into the market, invest more money into yourself. Go for English improvement, accent improvement, AI training, computer training, MBA, CPA. Do what makes sense to you in your situation. Everybody's situation is unique, but there is always a lot to learn. You figure out what can make more money for you, what makes you happy, and invest something in yourself.
Very well said. And improving your skills and gaining knowledge on any one of your choicest fields will always help you to get a foot in the door and to build up your career such a way that will be a rewarding career. So do think about that. Now, before we go into the next smart assets, let's just talk about ETF and everything, right? ETF, which is, viewers, as you know, exchange traded funds. So AJ, my question to you is that why ETF and mutual funds are so attractive for newer investors?
So ETF or exchange traded funds, as you rightly said, allows people to invest into multiple stocks with a fraction of money. You can invest $100 into top 500 companies. Buy Russell 1000 ETF. You are investing money into the top 1,000 companies, a fraction, $100 stock ETF investment, giving you exposure of top 1,000. So when you're investing money into mutual funds or ETF or these index funds, so you're investing money into a balanced way, in a safer way. The idea is when one stock goes up, second stock goes down. So the market is balancing itself unless things really drastically go down, which can happen. But at the same time, these things reverse itself. I mean, if you give it enough time, historically, the market has grown 10%, 12% year over year. If you look at last 50 years history, you will find the market has grown substantially. So if you have patience, if you have the long-term view, investing money into mutual funds, index funds, ETFs will always work out in the long run as a retirement plan for you.
Very good advice. Very good advice. Of course, besides that, improving your skills and talent, whatever the field that you like, all the courses are available. And many of them, most of them perhaps, are online courses. You don't even have to go to a location to get training. So do look after that. Now let's go to another smart asset in our list, which is a business ownership. This country, the country of immigrants, has been built on immigrants' contribution to small business, to mid-sized business, to large businesses. That's why USA has prospered like no other country in the world, because it gives so many opportunities to start your own business. You just need to have a courage, you need to have full plan, and you need to have complete understanding of the business. So AJ, tell us more on business ownership as one of these smart assets.
You're 100% right, Sanjeevji. This country allows a lot of opportunities. If you are willing to work hard, work longer hours, you have a lot of opportunities here. You can buy a franchise. You can start something of your own. Please remember, everybody else's job seems easier. Just because a restaurant is doing well, you don't want to buy a restaurant. You find your own strength. What makes sense for you? Everybody's situation is different. Find out where you bring a unique perspective, a unique strength, and then decide. And if you find yourself in a situation, I don't know what I'm doing, I have no unique strength, consider a franchise model. Franchise model is less riskier than starting something of your own, because the formula has already been figured out. Invest into something where you don't have to be leaving the job. If you can start a business where you can invest part-time, it's less risky that way. If you have husband-wife situation, maybe one spouse can keep a consistent job and the second spouse can invest. Make sure you decide what's the balanced way of investing money into a business. But when you have a business, make sure you're investing enough time into it. No business is easy. It seems easy that this person is making a lot of money, that person is making a lot of money. Take a step back and know that the bakery store guy is going to the bakery at 4 o'clock in the morning to bake those cakes, to make the tea, to clean the stores. The grocery store guy is going to the grocery purchasing market at 1 o'clock in the morning. The all groceries are purchased between 1 a.m. to 5 a.m. So by 7 a.m., by the time you go to the store, they have cleaned the grocery, they have put the grocery where it's supposed to go. Nothing comes easy. Look at the professional market. We are working 24 hours in the tax season. So every business has its own unique challenges. Make sure you understand the challenges, the strength, the weakness. Do a SWOT analysis, and then you decide what makes most sense for you.
Very well said. As they say, AJ, in the world of business, when there is a risk, there is a reward. So you should be able to take a risk. And the risk, as he mentioned, challenges. Challenges is somewhat risk that you got to get up early in the morning, or you got to put in the longer hours to develop business. You need to find more ideas how to promote your business and have your message reach to as many people possible, so that way your business can prosper. But here's one important advice that I want to give it to you all, that if you're thinking about starting your business, first question is going to come to your mind is that what kind of entity that you want to set up, whether it's a LLC, S corporation, C corporation. Everyone's tax situation is very, very different. And before you just try to get some information online, I suggest sit down with CPA, knowledgeable, experienced CPA, have them look into your financial situation, current situation, and the future situation. Based upon that, they will advise you what kind of business that you're starting and what kind of entity that you should be really, looking into it. You really setting it up, because it will help you with the tax benefits. And there is no other CPA to help you in that matter than Mr. AJ Kumar or anyone at SAI CPA Services that are trained and knowledgeable. CPAs on hand will definitely guide you in direction. All you need to do is pick up a call, 908-888-8900, or visit SAICPAServices.com. No question is a silly question, but by not making that phone call, by not getting their advice or suggestion, it could hurt you, in the future. So don't do that. Many businesses have suffered because they end up changing from one entity to another entity a year or two later, AJ, right? And
Absolutely,
it really creates a confusion.
You're 100% right. It's very important. An LLC pays 15% self-employment taxes that S-Corp does not. So by not choosing the right entity, it can really cost you a lot of money and a lot of frustration in the long run.
Yep. All right. With that note, as we come to an end of this episode, AJ, let's run down the list of smart assets for wealth building that you really gave us a guidelines and information. First, it was the real estate, the number one. Then it was the retirement accounts. Then the stocks and ETFs, stock and equity, professional skills and education. That's a very, very important. Mm-hmm. And of course, business ownership. So we covered this much, and in the next episode we'll cover remaining 4 or 5 smart assets for long-term wealth building right here on the Money Talks Season 5 on ITV Gold. AJ, thank you so very much for your time.
Absolutely, Sanjeevji.
All right, do tune in next week and let us know if you have any questions. If you need to know more information, you can just send a question, iq@itvgold.com, iq@itvgold.com. Send in any question that you have. Until we meet again, I am Sanjeev Pandya, wishing you all happy and smiley days ahead. So long.